Hello, hello. There I go. Oh, give me 1 second, guys. Let me wipe this a little blurry. Not like you guys need to see my beautiful face anyway, but I hope you guys are doing good. We're gonna wait a few more minutes to have some people hop on, and then we're gonna go ahead and get into it. That's a little better. There we go. That's a little better, yeah, for sure. So we are recording this meeting. So I'm gonna go ahead and get started, and everyone else will probably just end up catching the recording because I don't want to punish you guys for being on time. Appreciate that. And give me 1 second. I'm gonna pull up share my screen. So tonight's class, we're gonna be going over market structure. And this is a super vital piece of learning how to trade in the foreign exchange markets. For the simple fact is if you can't read the markets, then you can't really make money. And that's why we're all here. And understanding what market structure is will help you enter your trades and exit your trades more appropriately. All right. So before we do even get into that, I want to go over how to read a candlestick because I know this is something that I keep running across with some of the students been asking me questions. So I'm going to cover this briefly, and then we're just going to go ahead and get into the lesson. But candlesticks are a representation of price in the market, and if this is your first class, obviously you know that's something you just kind of want to take note of right now. It'll make more sense later, but candlesticks are a representation of price in the market, right? And so every candlestick has representation of price rejection, has representation of an opening and closing. And so what you're looking at right now is a positive candle, the green, and a negative candle, and I guess that's orange red-ish, right? And so in a positive candle, all we're talking about is where it opens at, where it closes at, the high of the candle and the low of the candle, which the low of the price and the high of the price. So let's say the candle opened here at, let's just keep an even number. We're going to stick to gold numbers, say 2,700, price opened at 2,700, came up to 2,800 and closed, but it came to a high of 2,810, but it closed at 2,800. And it came to a low of 2,690. You got me? And so that's how you read these candlesticks. If you need this graphic, it is in the Munster's Guide candlestick of how to read candles and how to read signs. You have that in your student email. And if you don't know what your student email looks like, your admissions email, give me 1 second, pull that up for you guys. Let me stop share and reshare. You have this guide in the email that I sent you. If and for everybody listening later in the recording, this you can always revert back to this email, but it is at the bottom of the email. Actually, let me go to the very how I pulled it up so you guys can see exactly where it is and you know exactly which link I'm talking about. 1 second. Of course, sharing screens always make your screen freeze, but give it a second. Can you guys hear me okay?
Yeah, I can hear you good.
So 1 second. With my Forex, I have like 105 tabs open. That might be one of the reasons. But like I closed like 10 of them before this session started. But it's cool. We'll get to it. All right, cool.
That
Up.
definitely could be an issue.
Yeah, definitely the 110 tabs, 105. All right, so I just exit up. Don't even worry about it. So this is the we'll just go into it, but this is the Muster candlestick guide, the Muster guide to understanding candlestick patterns and how to enter the market. But this is the slide that was outside the introduction that you want to focus on, just learning how to read candlestick and what each candlestick means. All right. So now we're gonna go ahead and get into the markets, and I'm gonna figure it out. Okay. Put my phone on silent. People trying to get in real quick. Second. This out. This out. Okay, maybe that will help. I want to pull. Well, they're gonna take me to a whole. They're gonna exit out of that one too. We're gonna go straight to the charts. All right, so we are currently looking at gold right now, as always. I'm always going to start off with gold. I might stray to like Bitcoin or something for whatever reason, but for the most part, I will be teaching you guys mainly from gold because it's what I trade every day. So between gold, US dollar, gold versus euro, gold versus Australian, the Aussie dollar, those are the markets that we're trading. So what's going on, Ian? So yeah, just tapping in. I'll just kind of go on over how to read a candlestick, but I'm gonna send you the recording after this. Don't even worry about it. So market structure, all we want to learn is how to read these markets, right? We don't want to think about it more than the fact that price is really the only thing that matters. All right, price is the only thing that matters. You want to know that you got in at a good price, and if you're going for a buy, you want to get in at a low price and sell high. And if you're going in for a sell, you want to get in at a high price and sell low. You got me? Or so what that actually looks like is, let's say you're getting in right here at 27.71, getting in right here at 27.71 for a sell. You want to get out right here around 27.33, right? All you're doing is waiting for the market to go down to collect your profits. So we're going to break this down to the 1 week time frame real quick. The 1 week time frame. Scrunch this up a little bit. We're going to go over a few different areas in actual gold. This is actual gold pricing right now and what it looks like. So the first thing you want to ask yourself when you're trying to read market structure is it in an uptrend, a downtrend, or is the market just consolidating and going sideways, right? Just going sideways. All right. So currently right now, if you had to look at it, you would say that this market is on an uptrend, right? These are 1 week candles. So each of these candles currently represent 1 week. 1 week of price action. All right. And so right now we're looking for is an uptrend, right? It's an uptrending market, meaning we're looking for a buy, because if you don't want to ever go against the markets, don't feel like you're going to predict the markets, don't feel like you're going to control the markets. You want to be able to get in where you fit in, which is with wherever the market is going. You don't there's no manipulating the market unless you are 100 trillionaire. That's probably the only way that you can manipulate the market. And if you're not that, ain't nothing to really think about. So as I'm looking at this market right now on the week time frame, I'm looking at the fact that we're going upwards with it. So I'll be looking for a buy, and the signal that I would be looking for is basically a discount, right? Something like this. So price came. So these, just so you guys know, my charts look a little different from the average trading view. The normal default white and black or white and green, whatever the regular colors is. I don't even remember. It's been so long. But nonetheless, the blue ones are negative and the yellow ones are positive candles. All right. So if I'm looking in to get for a buy, first thing I'm gonna say is it uptrending, downtrending, or is it going sideways? Obviously, it's going up. I'm looking for a buy. So first thing I'm gonna do is try to get a discount. So price was right here on this candle at 27.67, and you can tell right here where these are the prices right here on the right if you didn't know. I know we got some new people on first timers, but nonetheless, so if I'm getting in right here 27.67, I'm gonna wait till price comes here to 25.61 if I'm holding trades for a lot longer. Obviously, we're on the week. I'm just kind of giving you guys an example. And then I'm gonna go ahead and enter in right here, because if I look at the price originally, it's 27.67, and I get in at 25.60, that's a lot of room. Just these 2 weeks of candles, that's a lot of price action that happened for price to come down, which is now a discount. And so I would enter here at 25.56, somewhere around that area, 25.50 area. And then I would use this next week's candle to ride all the way up to 27.24. And that's literally almost about 2,000 pips. All right. So something to think about while you're also looking at market structure. Give me 1 second. While you're also looking at market structure is the sentiment of the market, because obviously if you're on a week time frame and you're not trading, you're not planning on holding a trade for a week, and that means you need to break down the time frames a little bit more. The only reason I was bringing up the week time frame is because it gives you a bigger idea of how much each of these candles have weight. Like when I say weight, I mean the importance of each candle and how much weight it has. I'm trying to see how I can explain this for you guys. See, I'm gonna break it down to a smaller time frame first. Stretch these out. So on a 1 hour time frame, any signal candle has a completely different weight. The bigger the time frame, the bigger the weight of the candle, meaning how much more important it is to be taking note of, right? So I'm pointing at this candle right here because that's a doji candle, and that means the market is indecisive. So indecisive on a 1 hour time frame candle versus indecisive on a week time frame candle means two different things. If it's on a week, that literally means their whole week the market was indecisive. They couldn't decide whether to buy or sell, and that doesn't happen often. But if that was something going on, it'd probably be like a political event or something of that nature that would keep the market from going up or down. So think about it like that. When I say weight, it's basically from the time frame. If you break it down to from a 1 hour to a 4 hour, any signals that you see on a 4 hour time frame hold more weight than anything you see on a 1 hour time frame. Does that make sense? And if you guys have any questions along the way, feel free to unmute yourself and just ask, and we can go from there. I plan on this being like a 30-minute class tonight, so I just want to leave some room for questions, but I just want to make sure that you guys at least understand market structure so that you guys can start entering the market appropriately. So first thing I'm looking for is, are we in an uptrend, a downtrend, or is the market going sideways, or is the market consolidating, right? So being able to know what market structure is going on at that current time should dictate your trading strategy. You got me? I'm gonna say that again. Whatever the market structure is at that current time will dictate what your trading strategy is. If you don't have any strategies yet, it's probably because you haven't been along the classes enough. But nonetheless, once you start to understand how these candlesticks work and the way that they move and the volatility and price action, the things that are driving the markets to go up and down, i.e., the banks opening at 8 o'clock a.m., banks open at 9 o'clock a.m., another set of banks open, and at 10 o'clock a.m., another set of opens. So all those cause volatility to make these move, make the price action, make the volatility happen, right? All we're looking for is an opportunity and a signal. I think last week we were talking about areas of confluence, and just kind of briefly going over that again. Areas of confluence is just multiple signals, 3 to 5 signals saying that, hey, the marketer is going to go a certain direction, all right, up or down. That's all it can do, up and down, right? So market structure, also what you want to look at. You back up a little bit, see if I can find something in here. Okay, cool. So perfect. So this area, we get some triangles in here, areas in here. Oh, nope. Delete. I'm gonna just circle this. So this area right here, this from about right here to about right here, right? This area right here is consolidation. Consolidation meaning the market has consolidated, meaning there's not enough there's not, I'm not gonna say not enough price action to make a trade, but not enough price action to have a full-blown trading strategy take place. Meaning that you're going to be scalping instead of looking for a long-term trade. You're probably looking, when I say scalping, I mean getting in the market and getting out the market as quickly and as profitable as possible during a consolidation period. But if it's starting to expand like it is here, and all you'll notice in these charts, I don't care how far you go back, all you're noticing is that price is expanding and then consolidating, expanding and then consolidating. Just so you guys know, fun fact, the market really only trends about 5% of the time. So you can't always depend on a trending market to make money. And that's why understanding market structure really helps out, because you can make money even when the market is consolidated, even if it's this consolidated right here, this little area right here, right? Even if it's that consolidated, you can still make money, depending on your lot sizes and depending on where you get in, where you get out at. So right here, this is 2709. If I was to ride this up to 2717, that's about 80 pips that you could be making money off of just from right here to right here. You got me? So I don't want you to think that you can't make money in a consolidated market. And I'm definitely gonna do a part 2 to market structure as well, but I want to get you guys at least the basics right now, because it goes a little deeper than that. After you guys understand a little bit more about how these candlesticks are working. All right, so market structure is just keep that in mind. It's what you want to have in your trading plan when you have a trading strategy that you're looking to work. You want to make sure you have the understanding of proper market structure. So if you are in a trade and it starts to go south on you, you know that you should be exiting, or you should at least be holding it and waiting for an entry point so you can lose as minimal as possible. Because like I told you guys before, you're going to lose trades. That's can't avoid it. You're going to lose trades. It's how you lose. You want to lose small, win big, right? So this right here, this area right here, consolidation, and that's looking from anywhere from between 10 to 15 pips. That's what I would call consolidation. We're gonna move this circle here to expanding. This part right here. Just gonna make the circle a little bit bigger. There we go. All right. So after consolidation comes an expansion, right? Because what basically you're seeing right here is a lot of indecisiveness. People saying buy, people saying sell, people saying buy, people saying sell. They can't come up with a price. And then boom, out of nowhere, market expands, meaning a bank could have opened, a whole nother market could have opened. It could have. This was at 12 o'clock at night. So it looks like London session was about to happen. So this looks like London session opening. And then that's what caused volatility to get some more movement. It got me after London session. This is a 1 hour, 2 hour, 3 hour, 4 hours. So after about 4 hours, it kind of started consolidating again and going back to a reset, which is what I want to talk about next. So the market is always going to reset. Never feel like the market is not going to go back to the price that it was once at. Markets retest all the time, and on top of that, markets are always just going to go up and down. So if you wait long enough, and if you didn't over leverage your account and didn't have too big of a lot size, then you should be able to recoup, or like I said, take at least minimal losses as possible. That's what the goal is. When you know you're in a losing trade after you place your trade, you want to take as minimal loss as possible. So that's what you'd be looking for within market structure. And what that physically, tangibly looks like is, let's say I'm in here for a let me find a better example. A second. Okay, right here. So let's say I get in for a sell right here, right? Let me grab my circle back. Let me grab my circle back. Come here, circle. Let's say I get in for a sell in this area right here. All right, somewhere around there, right? I get in for a sell right here, and obviously, you know, it went wrong on me. I took the signal wrong, whatever the reason was. It started going up on me, and I'm in for a sell. But the prices are going up, and I'm in for a sell, and I'm starting to sweat a little. I'm starting to snap. It's looking ugly for me. However, if you ride this thing out, so if you got in at 26.98, right? 26.98, it came to a high of about 27.24. If you didn't have too large of a lot size, you could probably just let this ride out. So about right here where it comes back down and retest. You got me? So the market is known for that, especially with gold. Gold is volatile, but sooner or later it definitely returns back to where it was. There are times where sometimes you just gotta bite the bullet and take the loss. But one of the things that I've learned is if you can't learn to take uh, uh, if you can't learn to take small losses, sooner or later you're going to take the mother of all losses, just for the simple fact that market does just move on sometimes. You got me, because I know I started trading gold when it was like 1700, and now we're I think we almost hit 3,000 a few weeks ago per ounce. You got me. So if you would have been in for a trade earlier, and sometimes it just doesn't always return. So that's one of the things I want you guys to think about. And that's one of the things I want you guys to keep on your mind. Um, Market. What else can I tell you guys about market structure? So
Yo, Lionheart, real quick. So like when you see like those jumps,
mhm.
like by the hour, does that usually indicate like when like a bank is gonna open and a new session starts and like when a session closes?
Sometimes it can be a number of reasons. Most of the time it's just because banks do open and it causes the people, whatever the brokers or whatever, who's ever on the floor, to start placing trades for the retail traders or the institutional investors. So it could be that. The other reason is just it's just the market. Sometimes I say like this: if it's a holiday or something, you'll notice a lot of consolidation. So it's not moving anything because the banks are closed. So a lot of trades aren't being placed. You got me. So that does that answer your question?
Yeah, it does. I was kind of just trying to analyze like the chart, like just
Mm-hmm.
to see like to understand it, like the jumps and stuff.
Right. The jumps can happen for a number of reasons. Your whole goal is to take advantage of these signals. So this right here, this candlestick right here is called a lollipop. You got the fat head up top, got the stem, the wick at the bottom. And just so you know, wicks are rejection, price rejection. So that means price came down here to 2,700. People started rejecting it. And if you remember, on negative candles, this is a negative candle. So that means it closed right up here at 2,705, but it had a low of 2,700, 2,699 area, right? So that is a signal. If we go back to finish gracious, I might have to log in a second because I really want you guys to see that mustard candlestick guide. There we go. Cool. So signals, right? Part of market structure is understanding that when certain signals happen. This is I think I was going over this on a one-on-one trading session earlier, but this is a morning star. This is what we call a morning star. These are three different candles. This is a negative candle. This is a doji candle, and then we got a positive candle, right? And if you see right here, it's a three candle bullish reversion candlestick, right? Bullish, if for those who don't know, bullish means the market is going up. Bearish meaning the market is going down. You can remember that by bulls, they strike up, bears, they strike down. You got me? So that's how you can remember that. But what you're looking at is from this negative candle, price came down, right? Then there was indecisiveness, and then price came up. Now, if you see this in the markets, for like they had an example. If you see this in the markets, right? This where you're looking at all the market structure. If you see that, this obviously expansion, and then the market is reset and retesting, right? This right here is a retesting area, and that's a good signal if you see that morning star to let you know that the price is going to go up. Because if you look at this, we talked about support and resistance last week. Support and resistance, this is a supporting area. So when price came back down here, all this supporting area, if this was like a week or two ago, or even if it was a few hours ago, when price came down here, people remembered that was the price where basically people were saying, "Hey, I don't want to go under this." The traders weren't comfortable with price going under this, and so it came back up. And so what you're looking for are signals to get into the market, because it's going to do the same thing. Does that make sense, everybody? Let's see what else we got in here. All right. So what you're mainly looking for are engulfing candles to enter a trade. So when I talk about making money with these, we got about 5 more minutes. But When I talk about making money with these charts, all you want to do, because it's not about being right or wrong. It's about managing your trade properly and having proper stop losses and take profits set. Because if you get in right here and then you have a take profit of 3,200 and it's never even been past 3,000, that doesn't make any sense. But if you get in that 26.94 and you say, you know what, the last highest price, if I go back on a week time frame, oh, where'd all the candles go? Where'd all the candles go? A second, I disappeared on me. Up. Is it because my computer is slow? Where did the candles go? Okay, there they go. All right, so, all right. Yeah, I'm gonna do this on a week time frame. It's be a little easier. We're already all the way in 2023. 1 second. Let's chart together. So we're on a week time frame right now, right? Look like that. 1 second. Second. Did I zoom in too much or something? I don't know what's going on. All right. Get all this back down to measure. All right, so we're on the 1 hour time frame. So trying to get all this squeezed back in so you guys can get a bigger picture. So what I was saying was, if you get in at a certain price, you want to always set your take profit right before you start reaching resistance. Meaning, if I get in right here and the market, obviously this is, in hindsight because it's already happened, but if I plan on getting out here, I'm actually planning on getting out right here below wherever the last highest point was, which was about right here in this area, right? So you always want to set your take profit the same way you set your stop loss, the ATR, the average true range that we were talking about last week, the ATR. You definitely want to write that down, average true range. The same thing with your take profit. You want to have one ATR down the last highest high. You got me? So if I'm right here, the best take profit for me would be probably like around right here somewhere, because it retested right here and came back down. So this would be meaning I got in for a buy and I saw that there was some some resistance. And then I took it out because I didn't want to lose any more money. Yeah, it still went up, but also it went right back down that next candle, the next hour. You see what I'm saying? And so this would have been an ideal trade to get in right here, to close your trade right here. Yeah, if you can get that extra, that's fine. But I'm definitely moving my stop loss to a stop profit around this area. Now, if you want to go for it after that and keep the trade going, that's fine. But just make sure you set your stop profit right here, so when it does come down, the trade closes right here instead of down here, and you lost more than 50% of a profitable trade. You never want to go from making money in the markets on a trade to losing money in that same trade. You never want to do that. So anytime you're profitable on a trade, always take your stop loss to a stop profit so that you're making money now, and it ends up being an inevitable thing that you're profitable on that one trade, and then you're on to the next. All right. We got about 1 minute left, so I'm just gonna answer questions if there's any questions. I will end up doing another market structure video for you guys. But if you have any questions about average true range or anything like that, like I said, I do offer one-on-one personal trading coaching sessions as well. And then also, let me pull up this email, man, so you guys know what you guys got access to, because that email I put that together for you guys, but it's a pretty powerful tool, and it has everything you need to be a successful trader. So give me 1 second. Pull that back up just so you guys know where to find certain things. My signal, what's going on? Okay, here we go. All right. So once again, lionswallstreet.com is where you can find more info. I'm still upgrading that website, but nonetheless, this is the email that you would get after you signed up for your membership. There's a free crypto guide, and that's kind of neither here or there, because obviously I don't really teach too much on crypto. I feel like it's an unnecessary risk, but it's still viable and it's still valuable to know how crypto works nonetheless, just because that's where the industry is kind of, you know, starting to pay more attention to. But there's a professional trading admission form. And if you fill out this form, I can basically help coach you a little bit more depending on your experience. So you're not starting at day one if you need to be starting at day 20. You got me? The schedule is in here. I'm gonna end up taking off Friday, so we're gonna do Monday, Tuesday, Wednesday instead of Friday. If you guys haven't, just an older email, but nonetheless, everything you need is on this trading platform, how to get started in the markets, how to set up your accounts. I have my official broker in here as well, so you can use the same broker that I use. And then TradingView, there's a link in here for TradingView, and I believe they give you a discount if you click on the referral link in there. Outside of that, you do have access to the Forex course. It's a full-blown Forex course for you guys to go through it at your own leisure so that you can learn how to make money on your own time. The reason why I like trading Forex is because I'm not trading those services, I'm not trading no products, I'm working directly with money, and it comes directly back as money. It's an instant gratification thing, and on top of that, there's no middleman. All right. So I have these guides down here for you guys, 5 things to look for before placing a trade. Trading for a Living, great book, 3-hour audio book, because I know, you know, most people don't like to read, because I'm one of them. But I will read if I have to, especially if it's especially if it's about money and learning more about money and how I can make more of it. You know, I'm always going to set time out my schedule for that. So just, you know, being a Forex trader on a day-to-day basis, it's something that requires discipline, and it's something that requires patience, simple and plain. But nonetheless, you guys have access to this email if you are signed up for a membership. If not, give me a text or call after this, and we can get the ball rolling for you. But outside of that, we'll probably go ahead and call it a night if I don't have any more questions. All right. If there's no questions from here, I will see you guys tomorrow, same time, 7 p.m. I was doing hour classes, but I feel like 30 more minutes because obviously this is a lot of information. And on top of that, I also do classes in the morning. I trade live in the morning from around 9:30. Well, I trade earlier than that, but for you guys, so I don't like students being on the trading session sometimes, because I do stuff that I do advanced trading techniques that I don't necessarily want you guys to just pick up on just yet. And that's just because, like, if you don't know what you're doing, it's like putting your foot on the gas on a Ferrari. You just learned how to ride a bike last week. You know, it's just not a good look. All right. So I trade in the morning from around 7:30 all the way to like 10:30, Monday, Tuesday, Wednesday. If you do want to get on one of those live trading sessions with me, I normally let people in around 9 o'clock. That's basically when most of the markets are opening on the New York exchange, New York stock market exchange opens around 9. All the banks start opening around 9, or they open at 8, but most of them are completely open by 9 o'clock. And starting to place trades, and you'll see a lot more volatility. And it's a great learning lesson, because, like, right now, as you can see, since this class started, the reason why I teach classes at night is because there's not a lot of volatility. Yes, I could have still made money during this class, but it wouldn't have been a lot. But I will teach you guys how to look at the brokers. I will teach you guys everything you guys need to know on how to get to the broker, how to fund your account, how to transfer funds, how to make withdrawals consistently on a weekly basis. This is something that I'm giving you guys access to. And you guys also have access to me if you have my phone number or email, and I'm here for you guys. All right. But outside of that, if there's no questions, I'll go ahead and call it a night. I appreciate you guys for showing up. Thank you.
Thank you.
Thank
Appreciate it.
You have no problem at all. No problem at all. All right. You guys have a good evening.
you too.